Welcome everybody. Welcome to another episode of the First Fruit Stock Club. Mm, Man, we are back here again today, and man, hope you guys are having a great week so far. Man, having a great week, ups and downs like the market, but man, we always prevail, right? All right, so look, today, man, this is another week in the market I want to talk, but I'm gonna start with a quick story. Quick story. Today's headline and today's topic of the show is like it's 1999. Like it's 1999. Look, I remember 1999 was the end of my clubbing days. All right, it was the last time I decided that I was not going to the club anymore. I'm gonna tell you a quick story. So my friend and I, man, New Year's, it was a big time. Especially we would club in DC. All right, we would go to DC, and this one particular club was called, it was after college, single guy days and everything. We used to club. We go out and meet women, at the club. You never know. So we this one particular club we went to. It's called DC Live. I don't know if you guys remember the club. It's called DC Live, right? And DC Live. So my friend and I, we were talking. My best friend Reggie Red, shout out to him. Look, we were planning all week, right? All week about going out to this club. We said, look, we got to make sure we have our gear tight. We got to make sure we have everything together because everybody in the club they were going to bring it. It's New Year's, bring a new club. So we get to the club, right? And I remember this because at that time, 1999, in the club, they must have played Prince 1999 1,000 times that night. Right? I know, rest in peace to Prince, but I know for his publishing, he earned a lot of money that night, 1999. So anyway, the ball was about to drop New Year's. So my friend and I, we were posting up and we just see the women, women were looking beautiful, right? Everybody was all dressed up. And so this particular time, and we were dressed up, we were women, we were looking out, and then all of a sudden, all these women just started coming towards us. And my friend and I, we were looking at each other. We was like, "Yeah, I know, we looking good." They started coming towards us, and then they started walking past us. As a matter of fact, they were just like, "Hey, y'all get out the way." So they were basically climbing over themselves to get in front of us. We didn't understand. We was like, "Man, what is going on here?" My friend and I were looking at each other, and next to us, right next to us, was Allen Iverson. Allen Iverson sitting right there. He had his I guess one of his friends with him. So all the women they were going crazy. Like and the women were beautiful and they were just going crazy. And his friend was like, "Hey, you no, you stay over there. No, all right, you come on with us. Okay, you stay over there." He was like directing traffic. And my friend and I, we were looking at each other, right? And then we looked at Allen Iverson, and like I said, we spent all week, getting our outfits together, thinking about how good we were going to look and, trying to impress the ladies. And AI had a pair. It's like he got it. He came in there like he just finished working out. He had a pair of gym shorts and like a tank top. I don't know, whatever. It didn't even matter. At that point, I said, I am done with clubs. I'm never going to another club again. Wasting my money on a club. Right? So today's topic is like it's 1999 because I wish that I have taken that money and wasted my time in the club when they were just going to knock me down to get to AI anyway. But I wasted my money going to the club. We probably spent about $1,000, the outfit, to get into the club, and even the time that we spent, right? And if I'd have just taken that money and put it in the market, right, at that time, I would be anyway. So, like it's 1999, and I believe that we may not be in 99 in this AI boom, but I believe like 1998, early 1998-ish, this AI thing is really coming to market. I was just reading an article in the Wall Street Journal about how companies are now employees that are working on AI are having 100-hour work weeks. Right? They're doing the 100-hour work week thing, and basically, you know, um, they're spending all this time trying to move forward in this AI arms race. I mean, it's a real thing. People are really, and the difference between 1999 and now, those companies weren't making profits. These companies are making enormous profits right now, right? So we don't have to be an AI engineer, right? We don't have to be a founder. We can just align ourselves with the best companies in the world and go for that ride. Go for the ride that we're on now. Okay. That's the goal to align ourselves. Let me tell you, another reason is we're about to have, you think we've had inflation. We're really about to have inflation. I've been through this process before. Okay. The current Fed governor will be leaving and Trump will have his Fed governor. And Trump already told us, I want interest rates low. So guess what his Fed governor is going to do? He's going to lower interest rates, right? And yes, and I believe prices, I mean, interest rates, if you look at history, interest rates go down, prices go up, right? Basically, people can now refinance their debt. They're going to have more money, right? Housing market will unthaw, which is good. People have decided not to move and not to buy a new house right now because of the market. Because like you sell your house and then you got to pay a lot for another one, and a lot of people are sitting on 2% interest rates, like myself. So what's the advantage? There's no advantage in that right now. So 1999, it is a real thing. I think that we are like 1998, 99. So we really need to dial in on investing, especially the next 2 to 3 years. We need to really be in the market, really be investing. All right. So all right, let's move to the next section. Man. Good. So look, quick report. Dow Jones Industrial Average. What I like to do is I come on here every week and I report. I report basically from last week to this week, like where we are, what did the market do, right? And as you see, the low of the Dow Jones Industrial Average, they closed out today at 46,734.61, right? So the week low was 45,931.30. Okay. So when we're looking at the markets, and last week we had a lot of volatility, and even some this week we had some volatility. But we always look at like I said, the stock market is a time machine. It goes back in time and it comes forward in time. When it goes back, it's usually from a negative standpoint because it's saying that I don't know if the valuation that I had or the enthusiasm I had for the stock right now, maybe I shouldn't have had that. Maybe I need to reevaluate my decision and go back in time. And that's what happens when the stock goes back in time. It goes down, right? Market goes down and corrects itself, right? And there we go. Man. Market goes down and it goes backwards and corrects itself over time because it reevaluates. Well, I think I valued the stock too high, price wise, right? So in regards to the week low was 45,931.30, right? 45.9. And as you look on the chart, the weekly chart, we never came close. We had a little dip there, right? But we never came close. So you could have been scared and sold your stocks and nervous, but we never came close to the week low. We're always looking for the week low because what happens is if it hits that week low, then we really have to reevaluate. All right. And we almost had to reevaluate. Now get to the next one. The S&P 500. Once again, we had a nice little dip in the S&P 500. And if we would have sold out of the market, it didn't stay in the market, then we missed out. And matter of fact, if you were in and you had that dip, then you should have been buying like I was. right? You should have been buying, adding shares to your portfolio, right? And so that's what you should have been doing, adding shares at that period of time. And but I positioned myself early on. So I was buying back here when it dipped, all right, and looked at buying some more shares then. So the S&P 500, right? It once again it had the little dip. So the low of the week for the S&P 500 was 6,614.33. And yes, we had a little dip, but we never came really close to going back in a week and reevaluating what we thought from last week. So the market is still moving forward and still positive, right? Move if it the market moves if the time machine moves forward, then it's positive. It moves backwards, then it's reevaluating the decision is made to go forward. Right. If it goes forward and saying, hey, I believe that this stock is has more value than it does right now. Right. And you know, and basically it showed that it did. And the stock market moved up. All right, let's go to the next one. The NASDAQ. The NASDAQ really gave us a little scare getting towards the week, right? Going towards the week, the NASDAQ closed out at 22,941.80. 22,941.80. The low was 22,490.07. Right? So we did come close. We came within maybe 50 points of hitting that low, right? But like I said, if you stayed the course, right, just can't move forward and you're still buying, then you had an opportunity to get some shares at a discount. All right. The, the objective and the bottom line is you have to stay course. We are in one of the greatest. I've been through this cycle before, right? I've been through this cycle before. And a lot of times people get scared when the stock market goes up. Like, well, is it going to crash? Is it going to crash? And I don't know. No one really knows if the market is going to crash, but we know that because of the virus, and when everyone shut down and everyone had to go home, we know that we had to basically we moved to a digital economy. And the stocks that are driving the digital economy are the stocks that are moving forward today. And we must make sure that we are invested and we'll continue to buy shares. Man, I am a proponent. I teach everyone, in my course and in my club, the First Fruit Stock Club, that we have dividends and we use dividends to buy growth stocks, right? Or we can just collect monthly dividends and we take our monthly dividends to buy growth stocks, right? Right. And even if we're trying to grow at an even faster rate, and this is a time you can be aggressive. This is I discussed this last week as we are in a risk on environment, right? That means that money is plentiful in the market and people are aggressive in their buying right now and buying stocks. And we've had a little consolidation period, I think, because we really haven't touched any of the weekly lows, right? That's what we're looking for. Those weekly lows, the points that I discussed, the weekly lows, we're looking for that and see if the market comes close to that. And and if it doesn't, and what happens is really hard to buy on those lows because the market is bouncing. It comes close to that weekly low and it's bouncing, right? It's bouncing and it's really hard for you to kind of get in there, right? But you can buy at those points. But like I like I said in the beginning, investing involves risk and you can lose your money. And the stocks can break that low, right? So but we're always looking at those lows where they are. We follow the indexes. The indexes will lead us to the promised land. And the promised land is having an investment account that can take care of us and our family and be able to make the decisions, right? Man, investing is where it is. Let me tell you why. Because if we treat it right and we treat it well, right, then issues that we may have at our job, it's tough to be at a job and have issues and and we're worried about our paycheck, right? Nothing like being able to work and we got issues. Hey, whatever, you know. I'm not really tripping. I got savings. I got 3 years of savings in the stock market. I have dividends coming in that can pay my bills, right? We're not as worried about that. But when we don't, right, and we don't invest and we put ourselves in position where if something happens to the job, then we have issues, that can be a lot of stress. Man, the stock market is there for us to relieve us stress. We don't have to be stressed out, right? The market can provide our needs, right? And as well as giving a portion of what we make in the market. We don't just invest and invest, we give a portion of that, right? We give our first fruits. We give our first fruits and we invest our first fruits. And something magical happens, something strategic happens to our money. It begins to grow when we follow the rules. But a lot of times we don't follow the rules and maybe no one has told us what the rules are, and we're so out of whack with the rules that it's hard to work our way out. But I'm here to offer you a way to work your way out. Join the First Fruit Stock Club. You get a one-on-one. We'll work directly, right? And I have a free version, and that's more to get your mindset together because I know a lot of people are nervous in regards to stocks, right? And then we have the paid version, and that's if you're ready to replace your salary and have like 5 to 10 years worth of savings in case something happens to your job. You don't feel like the world is going to end. It's enough thing to lose your job and have pressure on it, but the next thing is to also have to worry about where your next meal is coming from, where your check is going, when your next check is coming in, right? And that's why we invest. That's why we do that. And yes, it does take some sacrifice, right? We have to sacrifice, um, to make money. I mean, to sacrifice to provide a cushion for us and our family. We have to do that. All right. So keep investing. I love, even though the market has been up and down, this is still a great time to buy and continue to buy. I love probably more beginning in November. We may have a little bit more turbulence in November, but after that, we get to that Christmas rally. But this is the setup. A lot of times people say, well, I'm going to wait, invest. You're not going to invest. If the market goes down, you're going to get scared again. I mean, that's really why you need a community to help you move forward. Because well, I'm gonna wait or no life. If you haven't done it yet, you're probably not going to do it. I'm just being honest. I mean, even with me, if I haven't done it yet, unless a dire situation happens, you're probably not going to do it. That's why we need a community to interrupt us, to interrupt our lives, to get us thinking differently. And that's what we do at the First Fruit Stock Club. Hey, I appreciate you guys joining me. Every week I'm here. Man, anyway, every week I'm here and I appreciate you guys. Look, life is about being fruitful, right? We want our lives being fruitful. That's what our lives are meant for, being able to put ourselves in situations where we have enough to help others also, but also helping ourselves, right? And investing, a lot of times it's why invest for retirement? How is that helping you out right now? You need to invest for right now, right? You need to have a portion you invest for right now and a portion you invest for the long term. Okay. You can have a short term, a midterm, and a long term portfolio. You can do that. All right, man. I appreciate you guys for inviting me, giving me a few moments of your time. I say be fruitful. And until next week, guys, have a good one.